Well, the highlights of our 2016 results are a solid financial performance with improvements in all of our key metrics. So, despite a more challenging NHS environment, we reported sustained improvement in revenue, in profit, in cash flow, in earnings, and also in dividends. So whilst some part of the business performed better than others, overall the profit was in line with our expectations. Total revenue increased 2% up to 158.7 million, including recurring revenues, which also increased more strongly by 4% to 128.5 million. Group operating profit was 6% up, as we strengthened margins in a number of areas in the group as a result of cost control. Cash generation was better than the previous year, and we ended up with net debt all but eliminated, and EPS was 9% ahead at 49.4 pence, with dividend tracking that, and in fact slightly ahead of that at 10%, with a final dividend of 11.7 pence. So a set of financial KPIs that gets stronger as you run down the P&L and once again delivers on our financial promises. Looking at the divisional performance and starting with the primary care business, which is GP, and the community care business, which is anything that's not in GPs or in hospitals, strong financial performance there. We maintained our UK primary market share lead at 55%. That was sticky, of course, because more than 3/4 of our folks have been with us in England for over 10 years. EMIS Web rollout program, our latest product, has finished now in England and Wales. That's done, but we're moving forward in Northern Ireland. We expect to finish that during this year, and we're starting procurement in Scotland this year with a view to rolling it out next year. Child, community and mental health, sometimes called CCMH, market share was up, in fact above target at 16%, and we're looking for a 20% target looking forwards. Moving on to community pharmacy, strong financial performance again. Our market leading share, around 37%, was increased and indeed expects to grow up to 50% during 2018 as we roll out our Lloyds contract. Our new product, ProScript Connect, was accredited throughout the whole of the UK, and our independent pharmacy rollout has begun. And then this Lloyds pharmacy acceptance, the contracts I talked about earlier on, is expected in probably the end of Q2, with accelerated rollout after that. And then to finish the suite, secondary, of course, the hospital space, and specialist, which is diabetic retinopathy eye screening. A mixed performance there. Secondary care largely in line with expectations after some first half restructuring, and also the secondary care NHS environment remains difficult to predict because of the sluggishness, but we did have a number of important contract wins there. And finally, we had specialist wins in revenue terms, £19 million worth of extra business there, significant implementation activity going on, but that's held back profit because of the related costs and operational inefficiencies. Well, of course, the NHS funding gap is an interesting area. It's that mixture of strategy and demographics, the concern that the NHS has of making a finite amount of money match an infinite amount of demand as we all get older and we all have longer term conditions. So we've continued to make progress in that area, connecting our own and third party products, because this idea of connected care is to provide faster, better and cheaper care. And that's really inclined to work towards interoperability through our partner program, where, for example, we've reached 80 partners and generated £5 million worth of revenue during 2016. The NHS published a thing called sustainability and transformation plans, and that's the way that they're showing how they'll be able to change the NHS. So instead of doing the same old thing in the same old way, they'll do it differently and therefore better. So again, back to that mantra of faster, better and cheaper care. So that's again, I think, the most obvious sign yet that the NHS is embracing the need for that change, especially with a primary and community care focus, which of course reinforces our existing market strategy and provides us with new market opportunities, for example in hospital and out of hospital settings, things like urgent and emergency care, out of hours, medicines management and so on. But in addition to that, in relation to the NHS funding gap and the constraints it imposes on monies at the end of the day, we took appropriate steps to adapt our businesses to match those NHS changes. So partly that was strategic, so that we became a joined up organisation across primary, community and secondary, but also of course there were some cost-based implications, and we therefore harmonised group employee pay and conditions and started at the very end of 16, and that will go through into 17, to pull together those three parts of the business: primary, community and secondary care. That'll come into a single operating unit under the leadership of Dwayne Lawrence, formerly Managing Director of Secondary Care. It's intended to align the group with the NHS's strategy and also to optimise the cost base. So the majority of the integration exercise will be completed by the end of the first quarter. We expect to reduce headcount by around 100 people and to have estimated cost savings of around £4 million on an annual basis. The development of the patient business is really building on something that we've had for 20 years, believe it or not. So we have patient.info, a website which already exists. It's the leading independent provider to consumers of medical and wellbeing information. So for example, it's got 18 and a bit million unique visitors every month, up from about 11.5 during 2015, and that's generated for us advertising revenues of around £2 and a bit million in 2016, as well as some transactional services, online appointment bookings, those sorts of things, which again in 2016 generated revenues about £1 million a year. So putting those two together, the online presence and the app, allows us to have a platform literally to take things forward. So the number of visitors has grown and is continuing to grow, particularly in an international area. So for example, at the end of 2016, 74% of the visitors were outside the UK. So to accelerate that and to particularly bring forward a consumer focus as opposed to more the clinical or business focus we've had elsewhere, we've recruited a guy called Jason Keane. He's joined us as digital CEO and he's got extensive digital media experience. The business has become an independent entity with a plan to grow its publishing and its media business and to expand into a marketplace e-commerce platform play. So more of these transactional services, online appointment booking and so on. So there's a business plan in place with an investment of up to £7 million over the next 2 years, obviously against appropriate performance milestones, and that's mainly for people cost to deliver the improved media and the improved platform environment so we can take forward that advertising and that transactional revenue. We expect that will drive growth, and we hope that it will take it over the next 5 years towards a targeted annual revenue of up to £50 million. Current trading and looking at the outlook on a short and longer term basis really remains in line with expectations. The outlook's encouraging. We've got strong revenue visibility provided by 81% recurring revenue, solid order books and pipelines across each of the segments. So that structural organisation that we've engaged in last year, and we'll be engaging with different structural organisation in 17, bringing together primary, CCMH and secondary care, will improve efficiency. It'll also better align us with the NHS strategies. We're looking for growth from the implementation of existing contracts that we have in EMIS Care and also in community pharmacy, and we're looking at further growth opportunities in child, community and mental health, new models of care and also patient as well. So these NHS plans to bridge its funding gap continue to cause us some sluggishness in immediate discretionary procurements. However, the planning process itself emphasises just how much the NHS seizes upon our unique ability to help it deliver in line with its requirements. So in light of the proactive operational steps we're taking, our investment in patient-centred care and a digital platform, we're confident we'll overcome these short-term headwinds and secure an even more positive outlook in 2017 and beyond.